Good day to you all, friends. In health insurance policy, one important thing is restrictions on specific procedures. Insurance company will mention a specific restrictions for specific procedures. The policyholder should understand this. It's very important. So, for example, insurance company may say, in case of cataract, the restriction is 25% of the sum insured, or say 40,000 rupees per eye, whichever is less. Right? Okay, if somebody takes a policy for say, for example, 2 lakhs, 25% of 2 lakhs is 50,000 rupees. Okay. Now, if this person and if the restriction is 40,000 rupees per eye, if the person undergoes cataract treatment for both eyes, so the total bill will be 80,000 and the restriction is 25% or 40,000, whichever is less. So the 40,000 will be paid for this cataract operation. There is a restriction. If the hospital bills more than the restriction amount, then the patient has to bear the excess amount. So this is a specific restriction. So insurance company may similarly put a restriction for major surgeries. They may say 70% of the sum insured, right? Or the specific amount, whichever is less for the major surgery. One important thing to understand is when such restrictions are there, if the hospital bills for any reason more than this restricted amount, the patient has to pay the balance. That's very important. This specific restrictions given for specific procedures by the insurance company is also generally known as sublimits of your sum insured. That is, a particular sublimit is given for a specific procedure, named procedures. One important thing one has to remember in this case is especially when one goes for cashless treatment. In case of cashless treatment, what happens? The insurance company will enter into an agreement with the hospitals for specific procedures or a specific amount payable. This is for standardized procedures, right? Now what happens? Once the operation starts, there may be some deviations, some extra things that are non-standard that the surgeon has to do it. So that is not part of the agreement between the insurance company and the hospital, because it's not only once the operation starts the surgeon will know that okay, this has to be done. So in that case, whatever cashless treatment previously approved, it will be less than what the hospital is going to bill, right? And this extra bill, if it is justified as part of the treatment and if it falls below the sublimit, then it will be paid. If it is not falling below the sublimit and then it is crossing the sublimit, then that part will not be paid by the insurance company. So it's very important to know what procedures have sublimits, and then how the hospital is going to charge for these things. One has to understand before actually starting the procedure. Otherwise, what happens at the time of claim settlement, there will be a lot of heartburn and then lot of disputes. This can be avoided by understanding these sublimits well in advance.